thing. Let's share the screen. Here we go. All right. Welcome, everybody. This is the official presentation of the most marvelous 13 unit that we have come across yet. That's why we're sharing with all you guys. So a little bit of background about this particular deal. This is a 13 unit property consisting of 13 unit portfolio consisting of 2 properties in Lakeland. This is where our bread and butter is. This is where we have really honed in how to operate, how to manage, and how to exist in a dynamic and ever-changing environment down there in Florida and in the nation. So this 13 unit came across my plate a couple months ago, and I was negotiating it like always for a couple months until we settled on a price point. And I always do this, and sometimes they hit, sometimes they don't hit, and this one eventually hit. I was really happy about it because of a lot of the things that we're going to talk about today, specifically the area and the location mostly. But again, 13 units, Lakeland, Florida. We now have 70 units in Lakeland, Florida, and this one will make it 83 plus another 6 that we have in Plant City. So let's get going here. As always, we got to put a little disclaimer in, and this is the disclaimer. You could read it at your own leisure, but it's just saying basically that, everything involves risk if you choose to invest, and we're just here presenting what we think our pro forma will shake out to be. All right, so here is the sponsorship team. You got me, Nico Salgado, we got Sasha, we got Shane, Emeka, and Mark. Now, a little bit about myself, I guess. We could talk, briefly about our own bios, and then we'll get right into it. I don't want to spend too much time here because most of you know us already. But me, seasoned real estate investor, over a decade. I started in 2012 with a single family development in Nicaragua. Then I went full cycle on a 194 unit property from 2020 to 2021. It was like a 18-month hold, 20-month hold. And then now we have 76 units in Central Florida. Emeka.
Yes, that's me. I'm a Mac guy. Not going to read it every word for word, but basically, I've been investing in real estate since 2020, as you can see. And I've been at least trying to, one of my goals is to acquire property every year after that. So met Nico out in 2022, I believe, and that's when all the multifamily kind of came into play. So I live here in Lakeland. I'm right about 15 to 20 minutes away from the property, and I'm the one that's boots on the ground close to basically all our properties out here.
What's up, guys? My name is Sasha. Born and raised in Haiti. Um, I studied in Tampa, at the University of Tampa. That's where I fell in love with the whole Central Florida area. I'm an entrepreneur. I have multiple businesses. My main businesses being in Haiti and Dominican Republic. And I started investing in real estate in 2020, I believe, by myself at the time, and then I met these guys, and I think 3 years ago almost now, and ever since then, I've just been doing everything with them because I think it's a great team. We fully complement each other in every way of it. So as an entrepreneur, I know what it's like to have a team and how easier and how better it is to scale when you have a team. So for me, it was a perfect team and the perfect fit. So I've been pushing, and this is this is one of our latest deals.
Thanks, man. Oops. How do I go back now? Yeah, let's.
Technology is tough.
Yeah, it's great and tough.
He's just trying to skip over us, Shane, so it's all good.
All right, Mark, take it away.
Awesome, guys. So yeah, my name is Mark Dowsett. I've been involved in the real estate sphere since about 2016 when I started my property management firm here locally in Greater Tampa Bay. Since then, we've grown it to just over 350 doors under management. And also, I coincidentally run a small investment firm where we go after multifamily properties in several states, but also property management businesses. And again, started investing in multifamily back in 2020, just like most of the rest of us here. I got connected with Nico and the rest of the team, and yeah, been doing it ever since. But just recently, most for me personally, went full term on an 18-unit apartment complex in Tampa. So very familiar with the value add model and how to manage that asset. So either way, that's me.
All right. I'm Shane Deckert, licensed civil engineer, professional engineer by trade. I've been managing construction projects, design, build for the military. Been in the Navy for 17 years now. And with most of our multifamily, we've done it with the people you're seeing here today. My main role in all this is basically what I do for my day job is managing contractors, selecting them, paying them, making sure they do the job quickly, good quality of work, and that we're getting a good price on it. Thank you.
Awesome. Thank you guys so much. All right, let's rip into this. If anybody ever has any questions with who we are, we're pretty open and sharing and transparent. You know, our core values are listed right here. We believe in family, serving others, teamwork, transparency, and hard work. We will acknowledge our failures. We will also try to improve on our failures. We will acknowledge our wins as well. And we are here to create a tribe of people that want to invest with us for the future and beyond. Our ultimate goal is that we have investors that can do deals with us for the lifetime of that they are living, but also for their kids. We want you guys to have so much faith and trust in us that you will also have your kids invest alongside us at some point. So that's our goal. This is a little bit about of who we are. Our mission statement: we're committed to creating safe, clean, and welcoming communities for our residents while building lasting trust with our investors through transparency, integrity, and open communication as premier operators. All right, let's jump into this bad boy. I'm so excited about this one, guys. Okay, so we are acquiring this 13-unit portfolio. Right now we're set to close on 9/15, so that is a little more than a month away, and we are really excited about this particular opportunity for so many reasons. But let's get into it. 1900s construction. That first statement right there is what we want to address right up front, because that was our first concern. When we're getting into anything, we're always looking at a lot of different, aspects of it: vintage, location, demographics, etc. So this one hit the mark on everything except for the vintage. And we had our inspector, our trusted inspector, Matt Hawley, who has done all of our inspections since 2020, work with us on this one to also inspect this thoroughly. He went through all of the units, all of the buildings. He went on the roof, in the crawl space, in the attic, and he was very confident. And I quote, he said, "I see no reason why these properties won't last another 100 years with proper maintenance." So the previous owner had maintained these very, very well. And our main fear for this particular project was the fear of wood, right? Wood being in Florida, there are a lot of termites. Luckily, the previous owner has been tenting every 7 years, and we have records of that. So they vacate the premises and they tent them to get rid of all insects and termites. And then we also have a termite bond on this. So the structure is sound. And my main question to our inspector, Matt Hawley, who also steered us away from a number of other projects due to their poor state. He said that we don't even need to get a structural engineer involved here. This is an excellent opportunity. Shane, can you back me up on that?
Yes, and I'll talk about it in a little bit, but Matt said this property would stay standing for another 100 years if we maintain it well. Things were built very strong and sturdy back then, a little overbuilt in terms of columns and beams, and pretty much every stick in that building has been replaced at least a couple times over the last 100 years. And Matt was pretty surprised at how well it looked. I'll probably talk about it in a little bit, but the previous owners have owned it for 5 years, and they've put about 130,000, give or take, into the portfolio itself. So about 10,000 a unit. And it definitely shows. They've done a lot of big ticket items. So go ahead, Nico. Sorry.
Awesome. So the unit mix here is incredible. I really like the variety of different units we have. One studio, 8 1-bed, 1-bath, 2 2-bed, 1-bath, 1 3-bed, 2-bath, and 1 3-bed, 1-bath. So really nice unit mix here. And we're structuring this as a 70-30 split if we're going the route of syndication, which is likely at this point. We have a 5% preferred return, and we're not modeling in a refinance in our underwriting, only because times are tough, right? Everybody's afraid of what's happening in the market. So we don't model in a refinance. That being said, we will take advantage of a refi if possible. And as an example, our 10-unit deal that we did in 2023 is eligible for a pretty solid cash out refi right now. So we will take advantage if the opportunity arises, but we're not going to model it in so that people can't say, well, what if the interest rates rise or what if this happens? So we're not going to model in a refinance. We understand that we're going to lock in a fixed rate debt today for 5 years. So that's the strategy right now. You can see some of the return metrics here, and you guys will get all this, in your inbox, and you can look it all over. It'll be a PDF as well, and I also have the full underwriting, which I'll share with everybody after this call. But right now we're $200 under rent. And Mark, I don't know if you want to talk about it now or later, but we're going to talk about how we know that we are $200 under market.
Yeah, I think a little bit later on we'll be able to pull some comps, but yes, either way, I'll be able to explain in detail kind of what we're seeing in the rest of the market in various classes, but also properties right around the corner from here. So either way, we'll definitely be able to go over that in more detail here shortly.
Awesome. And we're still solidifying the loan, but I have some loose terms here right now. Actually, these are pretty solid. 68 LTV is what the bank is willing to give us, 6 months of IO, 25-year amortization. They may do 30, but that's an uphill battle that we might have to fight. 6.5% interest rate fixed for 5 years, and then another 5 years after that, it's going to float. All right. So Shane, is this your section, my man?
Yes, thank you. Right, so kind of already talked about the how the property is now. It's an older property, but it's on city sewer and city water, and those pipes all look good. We had them scoped, so we don't have to worry about a septic system or groundwater well. And property has been very well maintained throughout its life. Uh, Basically, what we would do is take what we have now, and we have some light renovations in pretty much every unit that's already been renovated, but just not to our standards. And then there's one unit at each property. So two of the 13 units that need an actual heavy renovation, which we have in there. It's nice we don't have to do the roofs. We don't have to do the electrical. The electrical panels are new. So this is one of those nicer properties that we've had. But once we do those renovations, then we'll get Mark in there to be able to get that rented back up at market rent. It's going to happen pretty fast because again, these units don't need too much work. But what work we are needing to do, we have our trusty contractor, Harley, who is sometimes joins these calls with us. He's been doing great work for us. He's got a team that ranges from 5 to 20 employees. Does great work, quick. He's very honest with pricing, sends us the receipts or the invoices for the actual materials he's using. And he's good. He's does great work, him and his team. And if there is ever any issues, he goes out and replaces himself or fixes things himself. So with that, we're a lot of the items that have been replaced are our usual maintenance expense items. So nice thing about this is that we're not going to have any HVAC issues or because of newer units, we're not going to have so many of those or any electrical issues, new panels everywhere. So a lot of that stuff that we're inheriting is really helping us out in the future and giving Mark less headaches from getting a lot of service calls. So that's all I
One
got
thing
on
I
it.
want to add for Shane is that we also put in a good capex budget for this, regardless of what the inspector said and how good we feel about this property being in good
Exactly.
shape. We did keep a good buffer of $150,000 for capex, so
Exactly.
that really like gives us way more than we need to come up to overcome whatever comes our way, basically. And this is
Yes.
the good things to add is that this is in a really good area compared to everything else we own. And that was one of the biggest reasons why we went after it, even though it was a little bit older than we usually do, but that was it was too good to pass in that sense.
Great neighborhood, right?
Yep.
Thanks, Sasha. And to sort of reiterate a little bit of our plan, the first thing we want to do is any deferred maintenance, which there's not that much. This property was even tinted, and we have a bond for termites too. So it's just been well taken care of. Any immediate projects would be some of the smaller things that our inspector found. Leak there, there's a leak from unit 5 to unit 6, very small one. that our contractors already pinpointed and figured out. Just little things like that. And then whatever Mark finds once we take over that the tenants will put in as service tickets or just our discussion. Phase two is the renovation. So whenever we can get a tenant to either relocate or vacate that unit, that's when we'll do our renovations so that we can get it up to market rent. And then that phase three is just sort of our routine maintenance, you know, termite treatment, HVAC, common stuff like maintenance on the HVAC units and just standard inspections. Other than that, we do have a hefty part of our budget, maybe like 10% of it is reserves in case something breaks, in case some big ticket items do come up. We don't anticipate or expect that to happen, but if it does happen, then we have the means to pay for it very quickly, so we're not losing revenue. And at the end of the day, if we don't use it, it just goes back to our investors at the end of when we sell.
Here's some sample returns. IRR is projected to be about 13.4. Cash on cash under 6, but close to it. And this is average. So this is not necessarily your big cash flow ticket. Now, anybody who says that they're going to be getting 8% cash on cash in Florida is either found a unicorn deal or just not really underwriting properly. It's difficult to get solid cash on cash, especially in what's called an appreciation market. Where the main value on this particular property is the exit. So yeah, there will be some cash flow, but it's not going to be magnificent. It will be enough in my opinion, to beat the treasury bills and high yield savings accounts. It's not going to be anything to write home about. But if you take a look at the equity multiple, we're over 2, and that is huge for me. So the value play here is we're buying under market value, 90K a door, as opposed to what's considered standard today. It's the comps are going to be about 115 to 120 a door. So right off the bat, we have value created from day one. The average annual return is going to be about 17.5%. So I like to look at that number, average annual return. Obviously, you're not getting that all year. We will be making distributions if possible, beginning of Q1 in 2026. Whatever distributable income we have will be distributed to the investors. But the big, in my mind, selling point for me is the equity multiple. So we have an over 2 equity multiple, which is hard to achieve. And then the average annual return comes out to 17.5%, which I feel is very strong, especially in today's day and age. So here's a sample return based on 100K investment. 100K invested in, you're only getting about 1,800 year one. Year two, it bumps up because we're stabilizing, and then you'll see it kind of incrementally go up for the next few years, and then we sell. Proceeds from sale will be 80,000 on top of obviously getting the 100,000 back. So the total all in cash out, if let's say you put $100,000 in, you will be walking away with 222,000 at the end of 7 years as a pro forma. And I have to say that everything is always a pro forma, a projection. But as we dial in our operations and how things function over the years, I feel we're getting a lot better at making these pro formas. So I do feel confident in this.
One thing I wanted to add for Nico is that one key point about this specific deal is that it's a B class. It's in a B class neighborhood. And one important part about that is that right now, most of our properties are kind of C class. And we're getting 1,100, close to 1,200 a month for one-ones in these properties, right? This particular portfolio, the average of the one bedroom are about 999, close to $1,000. So we're way below market, with even it being in B class as opposed to C class.
Correct.
So that's why you're slowly, like by year 2, year 3, you're gonna see a stabilized portfolio because you have less turnaround. It's also a great thing, right? To have more stable tenants as opposed to C class, which has also its advantages. But in this particular play, it's gonna be a more stabilized play.
All right. Anybody want to take it? Mark?
Sure, I can jump in a little bit. So yeah, so essentially what we've got here, and we've kind of talked about it a little bit. We have two different locations, obviously Missouri and Ingram. I believe it's 8 units and 5 units, if I'm not mistaken, if my math is correctly here. But essentially, just kind of like we've gone over, we've got eight one beds, two two beds, and then essentially three, or excuse me, two three beds. So for 13 units total. Older construction, but ultimately, what we are seeing in this specific market, that, and again, we've all kind of highlighted this, but we have the historic district, which is a huge, huge benefit. We are downtown adjacent, which is also fantastic. So we're going to be able to pull in from a lot of these new builds while we're not a direct competitor of theirs. As the saturation occurs or saturation goes away and we start to absorb some of these vacant properties, we are going to see those high B, low A class properties rents go up. And again, because of our location, we're going to see a property like ours, which is firmly B class, also go up. So I'm very optimistic on this specific market and location. But again, just our unit mix, 13 units between two properties, and obviously older construction.
Thanks, Mark. Here's some exterior pictures, interior pictures. I didn't get the best photos. We still we don't have the most amazing photos yet, but this is some just to give you an example of what we're dealing with. These are some classic old school wood flooring. I love that. And Emeka.
All right, mic check, 1, 2. What's going on? I'm a Mecca, of course, and I got two dual screens, so I'm gonna be looking down a little bit. But yes, as we already talked about, the area is great. I live here. I've lived here since 2023, and I've seen so much growth. Right before this video, I was just looking at the world population, and right now, Polk County is the sixth fastest growing county in Florida, and there's a bunch of growing still to go. I won't always read directly from the slide. I'll kind of just talk over it, but I work at Home Depot. I'm in sales on the wholesale side. And because of that, I'm able to travel often around Polk County, around Florida. And one thing I can tell you is reason why people love this area, love Lakeland, is because it's more family oriented than most. So a lot of people that are tired of, their insurance going up on the coast and, that fast-paced life and, near Tampa, near Miami, that's where a lot of people are traveling. They're traveling inward towards Lakeland, in Lakeland and the surrounding areas. So that's why it's growing rapidly. And it has been growing rapidly for a while now. And I can tell by the traffic. So yeah, you can just see the past two photos are of the properties itself. And if you go to that next slide, Nico, you can kind of see exactly how long it's going to take. So if you were to click on that 707 to 315, you're going to see a YouTube video of me. I was driving from one property to the other, so you can see the neighborhood. And I actually was playing Michael Jackson. Can't get enough. I forgot what song it was, but the song was 6 minutes, and there was 2 minutes left to go once I actually got there. So that's how close it is. And you can kind of see where it goes through downtown. And I want to emphasize the area again. We're right in the place to be. Missouri Ave is a very popular place. In that video, I have another video where I'm talking about the different houses near it. One of the developers was one of my clients, and he built two houses in a historic area that are going for a good chunk of change. So this is a very sought after area, and you can walk downtown. So you can see that through the video, but this area is the best out of all of our areas. And if you go to that next one. So in this slide, what I did was I wanted y'all to see exactly where all of our other properties are, right? We have the 44, 16, 10, a 6, and then we have the two properties, the 13 units. When we say that we're trying to take over Lakeland, we really do mean that. You can see how close everything is. So as Sasha mentioned, as Mark mentioned, we have some C-class properties, and some of our other properties, we've taken away homeless. We saw a lot of crazy things, dogs, and that's in a C-class area, and they're doing quite frankly fine. And this is by far the best area, and there's definitely opportunity for rents since we're so close to downtown, since a lot of stuff is walkable. So versus our other properties, this is by far not even a comparison of how good it is because it's B plus area and we can walk downtown. So this area is amazing and Lakeland is a great place to be.
And just to chime in on that a little bit, I kind of to highlight it, I personally view this property, as we've mentioned, in a B class. And realistically, while our C class properties and the rest of our portfolio can't necessarily play or draw from the higher class properties that are in the downtown area, this one in particular can. And the reason for that is it's firmly B class just on the outskirts of some of these brand new developments. And so again, as those properties continue to get fully leased up, we are going to be able to benefit from that because we are adjacent. If it was a C-class property down the road, that may not be the case, but because of the proximity to downtown, that's where we're going to be able to really benefit from this development and this growth that Lakeland's seen, largely due to, I mean, all of the investment, which I know Emeka is about to talk about, but also just where we're positioned. We're between Tampa and Orlando, two major metros. And we're seeing tremendous growth here in Lakeland. So anyways, just wanted to reiterate kind of the fact that we can play on the rest of the market here a lot more than we can at our other assets.
Perfect. So we can go into a little bit about the market. I'm not going to read this, but you can kind of see what we have going on over here. Lakeland is very diverse. So, of course, it's Florida. They love their public employees. But Lakeland Regional is huge out here. One of my clients is actually building an Orlando Health that is going to cost lots of money. They just got done building a $41 million regional hospital, maybe about 10, 20 minutes away. And I believe another Orlando Health is becoming in Polk County as well. So there's plenty of hospitals moving out here, Advent Health, Orlando Health, as well as Watson Clinic. And those are big employers, as well as Walmart. Publix is out, of course, out here. That's where the headquarters is. And we also have an Amazon warehouse where, they fly Prime Air. But you can definitely see that when it comes to jobs, it's very well diverse. They're continuing to come here, and Lakeland does know that. So I believe the city is trying to keep up, quite frankly, and also help with infrastructure and making sure the city funds goes towards the right places.
Yeah, one
Real
important
quick,
thing
Mecca.
to, one important
Um,
thing to mention is that it's Lakeland, like you said, is in between Tampa and Orlando, right? It's probably, I think it's 40 minutes away from Tampa, 45 minutes away from Orlando. So
Of
basically,
course. So
everybody's just commuting there. It's just the cost of living, everything else just makes more sense in that area for family, like you said. So it's just the perfect middle point.
Yep. So it takes about, let's just say an hour to Tampa or an hour to Orlando Airport. Lakeland just got a Velo Airlines, which flies Tuesdays and, or excuse me, Thursdays and Sundays. So those flights directly from Lakeland, they go to New York, Georgia, Connecticut, and I believe they're trying to continue to open up more spots. And it also goes to Puerto Rico. So we're starting to get our own airlines, and I believe more flights will come in the future, but it is huge. And as you can see, Lakeland ranks in the top 10 of 100 boom towns in the US metros. That's on Fox. You can just Google that and see where all those sources came from. But like I said, Lakeland is great. Most people don't know about it. Some people in Florida still don't even know about Lakeland. Me being here, I kind of know the right pockets, and by far, this area is great just because of, like I said, I would call it a hidden gem for how old it is. It's been here, well maintained, but I think he maintained it for a reason because he knew it was going to be a great spot and a great investment.
Nico, can you go back a slide? Back one more. So on the left, a lot of those employers know us. Uh, whether it's Emeka taking flyers from our other properties and dropping them off to their headquarters, or us contacting them directly. Um, that's something that we've kind of gotten into, which helps Mark's side out a lot as well as marketing and getting out there and getting our names out there. As well, we've been, for most of our properties, we've made websites and Google ads, which have been getting uh, pretty darn good clicks and views as well. That Mark said that has helped us convert. So not only are we just going through and flipping this property, we're making it nicer and better and maintaining it, but we're also getting the word out that we're here. And that's a huge online presence as well as pretty much everyone in Lakeland I think knows Emeka. So that helps as well.
I think you forgot to
100%.
mention, you forgot to mention that Mecca is also giving courses to in the Section 8, the housing authority. That's an important part, right? Mecca is giving courses to those at
Yeah.
least once a month, right? You would go out there and just teach people about
Yeah,
investing.
every now and then, the housing authority, will have these events, and then it's, sometimes catered towards women, older women with kids, and sometimes just catered towards people who, are more in need. So every now and then I'll go, and tell them how to get in real estate, how to manage some of their finances, and make them think that they can do things they've never done before because they don't realize it's, regular people like us. So, I do know people at the housing authority who tend to help. They do know me, do know my name, and when I walk in, sometimes I hope to think that I bring some uplifting spirits. But no, like I said, Lakeland's a great place to be. They're very local. People here tend to know everyone. So if one bad apple of us happens, and everyone's going to know about it. So we try to be good to everyone, give back to the community when we can, especially during hurricane season. And yes, like I said, we're really trying to build roots here. That's why we have most majority of our portfolio here. And I definitely think this is one of the best places to be in the long haul before it gets too popular.
Yeah. This kind of set much of the same, right?
Yeah,
Much of the
kind of the
same
same
thing.
thing.
Yep, this is just more updated data. There's so many different statistics, so many different articles that you can really just look up Lakeland. But it's a hidden gem, right? You'll see Publix headquarters bottom left. You got Lakeland Regional there. You got some the citrus Tropicana's here too. So that's why you got the oranges. But yeah, that's just some good information to read at a later date. And then I did screenshot this because I thought it was very important. It just kind of shows the employment and kind of like the diversity of it as well. So you can look at that at your own time and kind of see, the benefits of Lakeland of it being diverse and the employment that we have. So of course the jobs report just came out. I'm sure you've seen that, but I think Lakeland is still strong because a lot of people don't really realize that Lakeland is also like a good logistics hubs. There's a lot of logistic companies here like Saddle Creek and a couple other local players. And that's just because since Lakeland is on like basically the middle of the I-4 corridor, you can get from Tampa to St. Pete to Jacksonville all within a highway or two. So I think we'll be very good for the long haul. More data about Lakeland. We could talk all day about it. Yeah, there we go.
Financial assumptions. If you're ready to get dizzy or lose your brains, here we go. So this will be sent out to everybody, the entire spreadsheet. This is just the pro forma, or not even the whole thing. This is just a portion of the pro forma, data that I have here. So I do this for every one of our properties, or every property that I underwrite. I have over, close to 1,000 that I've done at this point. Giant, full spreadsheets where we're going to build out a pro forma of a scenario of, let's say we kept it for 3 years, 5 years. In this case, I'm holding it for 7 years just to show that, just to ride out any potential issues with downturns, down cycles, or up cycles. So we have opportunity here to refi or sell when at some point throughout these 7 years, or we will just wait until the 7 year period is over. What I do here is I always underwrite the same. I have 3% rent growth, 3% expense growth year over year, and that stays equal except for when we have a loss to lease, right? A huge loss to lease, meaning the rents are undervalued. So right here, I had to get those to market rent, which is 12.12, but I don't claim that we're going to get that year one, but we're going to bump the rents. So right here is where because I have to burn off that loss to lease. My strategy for underwriting is bring all the rents to market rate today, and we're going to start asking for that price. But it's impossible to get, let's say, 13 leases renewed within a year at full market rate. It literally never happens. It's impossible to do unless you kick everybody out and get everybody in the next day. It's just not possible to do. So if today's average is 999, I'm saying that the average by the end of year one will be 1079. I don't like to project more than $100 rent pump per year, even if it is severely under market, like I feel it is. And then we're going to gradually increase year over year. 1235 by the end of year three is where I feel that we will shake out. And in all honesty, we could be well above that. We're doing better than that on some of our C-class properties, but we're going to leave it as is, just to be quote unquote conservative, although I don't like that term either because, people kind of use and abuse it. You're going to see here the rate increase for taxes because taxes go up, they get reassessed. And I know how they get reassessed because I've done this on 4 or 5 projects now. and it's going to gradually increase and then stabilize by year two, between year 2 and 3, where we will be paying top dollar for real estate taxes. There's talk about taxes going down, but we're not going to project that. We have them going up. Insurance, good news here. We have quotes between $1,250 and $1,350 per door. We're going to call that good news because 3-4 years ago it was half that price, but this is what it is now. And I've seen double this price. So I like this for this particular property, given the vintage. They're still willing to give us decent insurance on this. The rest is all standard based on how we know we operate our other properties, and Mark's fee, et cetera, which is a kind of negotiated down because he's a team member with us. Typical for a size, typical management fee for something this size would be 8 to 10, or maybe even a little bit more percent of a management fee. But Mark gives us a little bit of a discount. And everything else in here you can go through and comb through on your own, and I will be readily available to jump on a call and explain every single number. I love this stuff, and this is what I live for. So let's keep going. And here, this is just some performance indicators and how we look at deals from a risk perspective, and how banks and lenders look at deals from a risk perspective. So they're underwriting it right now at a 1.3 to 1.4, 1.3 takeover. By year 1, we're going to be at 1.4 debt service coverage ratio. If you're not familiar with that term, it's basically after you get your NOI, can the debt be paid with some cushion? So let's say the NOI was like $125,000, your debt service can be a maximum of $100,000 a year, because they need to see that $25,000, or in this case $40,000 delta, or else they're not comfortable doing the loan. Same thing with debt yield. It's how much yield they're getting on the debt that they're providing you. So you need somewhere between 8 and 10%, and we're beating that. The cap rate, we're buying today at a 7% cap rate on actuals, which is incredible in a B-class area if you know anything about cap rates. And our all-in cap rate is also pretty incredible. It's 5.92 for a B-class property. Typical these days for a B-class property is still going to be around 5.8 to maybe 6. And C-class is 6.5 to 7. And we're getting it basically at a 7% C-class cap rate today, which I love. Break-even occupancy is another metric that we always track as well. How much vacancy can we have and still be cash flowing? So we can be 71% occupied, et cetera. Basically around 70% for the entire hold period and still be cash flowing. Important things to note. So we got some rent and sales comps. These were just pulled from the broker, and then we're also going to get an appraisal on this to back this up and have even more. Does anybody want to chat about this, or should we?
I would love to. So you say you live for the financials. This is what I live and breathe for right here. So the rent comps is kind of my bread and butter. Um, so I know in the beginning of the call we talked about being about $200 under market. And so based on what we've seen, our average rents for, just as an example, for a one bedroom, we're seeing on average about $935 for this current portfolio right here. Based on what we're seeing in the market, and again, I'm kind of comparing this to both B and C class, we're seeing we could probably, if someone was to move out, we could rent this property for right around the 1125, 1135 mark. And again, I think this is conservative. And the reason for that is a rent rate that we were getting for a one bedroom at a C class property also in Lakeland. And so I think we're being a little conservative on that point. But again, I think being conservative right now is the way to go when it comes to that rent estimate. And I guess what I mean by that is, in general, as we probably have all seen, the Lakeland greater market has seen some level of stagnation. We've seen some oversaturation with new builds, but there's room for optimism. And so what we're starting to see, and funny enough, I actually manage a couple of these rent comp assets that we have here, especially in the downtown market. We are seeing saturation go down, which means absorption's going up. Places are getting leased up. And with the lease up of those A and B class properties, we're seeing rents start to turn. And so while we're saying that we're $200 under market right now with the current rents, I think as the rest of this market continues to absorb, we are going to see those rents push even more. So again, if we were to have vacancy right now, we could easily push these one bedrooms up to 1135. And then as the market continues to absorb, we're going to see those, in my personal opinion, continue to grow. Again, we're in a great position here right into the downtown area. Historic district is coming back. We're seeing a lot of people want that, more of that feel of the old school as opposed to your cookie cutter that you're seeing a lot of times nowadays. So again, I'm seeing some real optimism in the market, which is why we're so excited about this potential deal and the fact that we're buying it at $90K a door. We're getting it $200 under rent value. And again, just kind of seeing some of these comps here, you see we've got some one beds going from $13.99, $11.95, $12.50. And again, I'm seeing where these properties are kind of galvanizing themselves. So because they need to lease up, because they are dealing with occupancy issues in the current market, they are going ahead and lowering rents. They're offering pretty high rental incentives just to force that occupancy. And so again, I'm just going to highlight this every single time I talk, but because we are under rented and I think we're lower than we should be, we're going to just benefit from that. So ultimately, this market, I think we have a really good opportunity to take advantage of the growth that's about to come.
Yeah.
And then also, I just want to add that our properties are going to be in a CRA district, the Community Redevelopment Agency. So, unfortunately for us, there's not as much incentives for being in that, but for new developers, it is. Lakeland loves affordable housing. And since it's in a community redevelopment district, that means that basically the city will give funds in order for developers to build. So, for buyers in 5 years, when this place is a lot better, appreciation is here, and the saturation has kind of gone down a lot, it might even be more attractive to developers who can build in downtown, because a lot of these owners around the area are a lot older and they've owned it for a while. So being in a CRA district means that a developer can swoop in and maybe demo it, do whatever they want. But the city is willing to give lots of grants for it, as well as TIFs, tax increment financing, as well as different kind of incentives for developers to build affordable houses. So to have two properties right near downtown, it could be a really good buy for a developer in 5 years.
Awesome.
100%. Yeah, and then we'll see here on the sales comp side, like I just mentioned, we're buying at roughly 90,000 a door, and we're seeing similar prices go for 110 to 125, 130. So we are seeing that we're buying it at a discount, and like I mentioned, rents are lower than they should be. So as they turn, we'll be able to take advantage of that swing. So either way, we're buying under market.
All right. We got some frequently asked questions that you guys can just read on your own, or you can just ask us questions now. I guess we should open it up. If anybody has any questions, I would love to be able to answer them. And then by the end of this, I'm going to give you a little link, a little Google form to fill out. This is for everybody just to fill out whether they're interested or not interested, or they want information, more information, whatever it is. So some frequently asked questions. I'll go through these real quick. When is the deadline to wire funds? August 29th. When will we receive distributions? We intend on making the first distribution at the end of Q1 in 2026. Sometimes it might be earlier, sometimes it might be later, but that's our intention. Do you have to invest in an LLC? No, you can invest however you want. You could do an LLC if you want, but you don't have to. Can I invest using my retirement account? Yes. If you have a self-directed IRA, 401k, or EQRP, you can invest through that. And Emeka actually does that as well. Can I withdraw my investment at any time? No. So real estate syndications are illiquid investments. You have to consider it. You're putting in your money until the deal closes and sells on the other side. Funds remain committed for the life of the project. What happens at tax time? We have a really, really good accountant and a bookkeeper year-round that will send you a K-1 tax form. You bring that to your CPA to do your taxes, and this will reflect your losses, income, etc. And this, if we didn't even get to any of the tax benefits of investing, but for those of you who don't know about investing in real estate, there's a lot of benefits to investing when comes tax season. How does the GP team get paid? So we take an acquisition fee up front of 2% of the purchase price, and an asset management fee of 2% of the gross collected rents through the hold period. That's it. There's no other fees that we charge. We don't do a disposition fee or a refinance fee like some other operators. And if we beat the pref, that's when we make money. We have to beat the preferred return. So even though this is technically a 70-30 split, it's really 100% split for the investors or the capital, unless we beat it. So if we beat the return projections, then we can start participating in some of the benefits. And I went through a lot of these scenarios in my recent podcast episode. If you want to check that out, I could also share that of how it works. But we don't really get paid until you get paid. So if we have a preferred return, like we do, a 5% preferred return, and we don't beat that 5% return on your investment, then we don't get any money. So we're not going to take any profits above whatever you guys don't get. So you have to beat the preferred return for us to get paid. Are there tax advantages? Yes, but you have to consult your own accountant or CPA. And insurance costs. People were worried about insurance in Florida, and so am I. So I'm always on top of it, and I have multiple different resources to pull from. This time we got a really solid deal with Franklin Street's master policy. So it's not set in stone yet, but I got a great indication from a trusted person at Franklin Street's master policy that says that we're going to have exactly how I planned it, 1325-ish per unit per year, with a 15% decrease happening in the fall of 2025. And then again, what about the resale value given the age? Well, our trusted inspector, Matt Hawley, said that this can last another 100 years, quote unquote. All right, let's break this out. Let's
And we're buying it way below already market value right now, right?
correct.
Yeah, that's one thing to add.
All right, so we're back, team. Let's hear some questions.
Hey, Nico, it's Melanie. Quick question. So, are any of the GPs investing in the deal personally?
Yeah, so we all are. The total amount is uncertain right now, but we will all be investing. Right now, we have $25,000 in between Sasha and I.
And your raise is only 550, right?
That's the max. So it might be less depending on which lender we choose, but yeah, it'll be about 550. I love these questions.
Send the deck and the spreadsheet. I'd love to take a look at it and get on a call with you separately.
Yes, I'll send you everybody here, and I'll send the entire spreadsheet. I will send this video and the PDF version of this, and then let's chat.
Cool. Thanks, guys. Very detailed.
Yeah.
Appreciate it.
Is Howard still there, or is he on the other call still?
Oh yeah, he's getting deals done.
So cool.
It's his time.
Cool.
Hey, Nico,
Thanks,
can I
guys.
ask? I'm sorry about that, Melanie. Didn't mean to step on you there. Nico, can I ask you a question? When you were, and first, thank you for the invite today. This is awesome. Congratulations to you guys, because searching for deals, this is not an easy one to find. So what really caught my eye is when you were talking about the cash on cash, and you were talking about I think yours was 5.93 as opposed to like the 8 that everybody certainly looks for. And you mentioned a term, it feels kind of like a unicorn trying to find that in Florida right now.
Mm-hmm.
How did your investors, or I'm not even sure if I'm phrasing this correctly, was there any pushback from your investors saying, hey, that's not a high enough rate of return based on what I guess folks have gotten used to in this industry?
Yeah, 100%. And that's a challenge that we always deal with when raising capital. And then I see, it's funny because I just saw somebody push out an email to me this morning saying 10% cash on cash with a deal that they have. And it just raises an eyebrow. It's just, I don't know who's getting that unless they're in a cash flow only market, which is very different from an appreciation market. You can cash flow maybe 8 to 10% in a specific cash flow market. Let's talk about Cleveland, right?
Yeah.
So
Certainly in the Midwest. Yeah.
it's possible, right? It's still difficult, possible, but you're not going to get the upside. So in the end, does that cash on cash year over year for the whole period equal the same equity multiple? That's why I'd like to look at the equity multiple as a deal in an appreciation market.
Nice. Next question, hopefully last question.
Let me add something if you don't mind before Nico.
Yeah, please go ahead, Sasha.
I'm usually the devil's advocate in the group, so
Okay.
we're always going.
Very true.
Yeah, I'm always going head to head because I'm an entrepreneur, I'm a businessman, and I'm always tackling down every number Nico's putting because for me it's like I always go with the worst case scenario because I know what it's like to be investing money into somebody else's idea or even in your own idea, right? So I always stress test everything, and that's why the numbers could have looked way better, right? If we're being a little bit more realistic. But
Yeah.
I kept pushing Nico. I'm like, yo, Nico, let's be more conservative. Let's say that we're not gonna achieve the 1200 the first year, right? We're not gonna be able to bump it up to 1200. But like Mark said, in the area there are 13, 1400. But I'm like, yo, Nico, let's not sell that to the people. Let's have people
Yeah.
that want to invest not in the deal, but in us.
Yep.
Because at the end of the day, that's what it is. Because we could have tough times, we could have unimaginable times, but if you don't trust us to get the job done, for me, that's because anybody can sell you any dream, right? It's about the team that we have, and that's why I'm part of that team, right? So that's that. I'm just putting this out there because it is. I'm always. It could the numbers could look. We would easily be able to sell you 6, 7, 8% cash on cash, but it for us that wasn't the point, and it's never
Gotcha.
the point.
Gotcha. Thank you, Sasha. Thank you, Nico.
You had a second question. I hope I didn't make you forget it.
No, dude, you blew me away with that one.
Oh
I think I
man,
forgot what
sorry,
my
sorry
second
about that.
question
Sorry
was.
about that. Sorry about that.
He'll come back to me.
You guys are so cool. If you don't know any questions now, or you have questions down the road, that's fine. It's always a little weird, when you're on a call with somebody. You don't know everybody. You don't want to ask a question or the wrong question. I totally get all that. So just if you feel like opening up, open up.
I have a quick question again. I'm sorry. Sasha, I thank you for that contribution. That's actually always what I'm looking for because I want to make sure that you've got, that you've considered worst case scenario before we see best case scenario. So do you have this in your underwriting, Nico, where you've actually kind of like you have different Excel spreadsheets that shows best case, worst case, status quo? Like, have you done that? Can we see that?
Well, Melanie, this is the worst case. Just so you know, because
So,
that
so what you're
was
saying is this is your worst case scenario. Got
correct.
it.
Yeah,
Which is
that was
awesome.
after pushing Nico nonstop, right?
Got it.
So I'm sure
And
you can swing a
I didn't
different
hear
one.
the, I'm sorry, I didn't hear the vacancy rate today. Um, what's the vacancy rate today?
In the market, or so the property is 2%. There's 2 units vacant, and we have the market vacancy as well. Mecca, were you
Got
gonna?
it. So you don't have two, and those are 2 units that you actually have to put capex into, or are they?
Yeah, so everything needs a little bit of work. And it's funny. So on our other projects, what we recently started doing was just not renovating. It's look, uh, we can essentially achieve market rate without renovating. So what we did on the past 2 projects that we have is we reserved the money that we have in CapEx. We invested into a money market fund, Raymond James account. Sasha's got us on that, and we're getting 5% on that while we're still getting market rate. And when the market, our strategy has been when the market turns, right, that's when we're going to pump in the money needed to really get the huge rent bumps. And we've been successful with that. This particular property can go the same way.
I,
But
I will I will say real quick, the 2 units that do need to have more of the CapEx budget that we've got in the underwriting, those are currently occupied at the moment. Just
yeah,
to kind of address that as well.
odd.
Just to back up what Nico said, for a 10 unit that we have not too far, excuse me, 16 unit that we have not too far away, the first unit we needed to rehab, I kind of went kind of crazy, got, better vanities than we needed, these new lights, new fans, and we probably went over budget slightly there. And then we didn't do anything to the other unit that's basically 2 doors down and they're identical, and we got the exact same rents. So that was a quick lesson that we learned, and it's been working. Not to say that that's what we'll always do, but if the residents that are living there don't really care for it, then we might as well make you have that money work interest in the high yields.
And one last question. So I don't know anything about this market. I know a little bit about Florida, but not enough to talk about this particular market. But you talked about demographic earlier. Who's the resident? Like who's renting this?
We have a
That's
mixture of everyone. So, Mark is probably know a lot better than me. Just from what I'm seeing downtown and the people are moving, it's a mix of, we work with St. Vincent de Paul, who helps us out with one bed, one bath. We have some people who either are service workers downtown or surrounding areas, or quite frankly, there's a lot of people who work at Publix because Publix has a really good employee plan. So I would say a bulk of people honestly work at Publix or in school. And then Mark could probably touch on that even better than I can.
Yeah, so there's a lot of obviously employment growth in general. We're seeing medical growth. We're seeing just trades in general. Given the location in downtown with what the downtown rents traditionally are, we're seeing a lot more students that are coming in. I actually manage a couple of A-class assets right around the corner. We get a lot of students that are there, or just younger folks in general that have a little bit more flexibility. And we're seeing that branch out into the historic districts here. But to kind of counteract that, we are still seeing a lot of your typical professional adult single individual, especially for these one bedrooms. But yeah, it's a lot of professional, but you're still seeing some students as well.
So middle manager positions, blue collar, and maybe some students.
Exactly.
Got it. Okay. Awesome. Thanks, guys. I appreciate it.
And then Florida Southern is basically walking distance as well, because Florida Southern University is one of the biggest schools here, in Lakeland, I should say. It's a Division II, but there's a lot of students who live around this area there, and there's student housing down the street as well.
How many students do they have? Do you know?
Oh,
And you
wow,
don't
you
have to know, and it's okay. You know,
I'm
my
sure I can find
brain
out.
is a commercial brain because I'm in the commercial world. So I'm always, curious, like who is the renter? What's the income level, and just curious, like who the
Those are the
target is
right
for this
questions to
particular
ask.
market. Yeah.
No, and I think one big piece of this too is it's walkability. You're gonna get the middle kind of class and just in general. You're gonna get, like we talked about, a lot of the students, a lot of the working professionals, but they're going to be attracted because you're right down the street from the joinery, you're right down the street from all the different restaurants downtown, and so there's a lot of attractive pieces that aren't just the apartment that you're going to be able to play from that are going to attract that kind of middle tier kind of class of worker.
And I saw some really strong companies that you listed, that's all really great information. The 1 to 25, is that like a 5 mile radius, a 10 mile radius, or is that like give me like an idea of geography?
I would honestly say a 10-mile radius is pretty safe from majority of the hospitals, the Tropicanas, and a bunch of employers. I believe Lakeland is north of 160,000 population, and Lakeland as well as Winter Haven, which is a neighboring city right after Auburndale. We're one of the fastest growing counties in the country. So there's a lot of growth, a lot of logistics, and I would say a 10-mile radius is pretty safe. And to get from one end to the other end of Lakeland would probably take you about 35 to 40 minutes with traffic. So it's basically like a big triangle. And if you look back on the presentation, you'll see where like the major streets are. And then whenever you're looking at the maps, look at Florida Ave and Kathleen. Those are two roads that go basically right through Lakeland that gets you to other big cities and neighboring cities.
Yeah,
Far
and
is
just
it from
go
the
ahead, Shane.
airport? Oh, sorry. Yeah, just on that topic, how far are we from the airport of Mecca? Because a lot of those um, uh, companies, Melanie, are situated around the airport.
About 20 minutes from the airport.
Okay. Yeah, that's a pretty good picture. Thank you, Shane. I appreciate that. Awesome. Thanks, guys. I'm gonna bounce off and let other people ask questions.
Thanks,
Appreciate
man.
it though. Thank you.
Thank you. Sorry, Mark, I interrupted you.
No, no, you were all good. I was just going to chime in and talk about, I looked up some statistics between 2023 and 2024 alone. We saw Polk County, which is not just Lakeland, but Polk County grew by about 30,000 new residents. So I think that just kind of mirrors the population growth, obviously, which is what we're talking about, but also the job growth. It's people are moving here.
Awesome. Guys, I put in the chat, I don't know if you can see it, but there's a Google Doc form. If you could just click on and take that at some point, that would be awesome.
And then I'm going to share my screen if I'm allowed to.
Yeah,
Let's see.
multiple.
I got a camera right in front of my face.
And we
Let me
got,
see if you can see this map.
yep, Steve has a question also.
Okay, so Melanie asked how far we are from the airport. I just wanted to show you exactly. So 12 minutes. And then you can kind of see where we're right in the middle of the five lakes that cover downtown. So Lake Morton is a nice area. That's where Publix is building an IT campus, right about right there. Um, Lake Beulah, this whole area is basically gentrifying because it's also in a CRA district, and they're putting a lot of money into to fix it up. And then right over here, where are we at? Bonnet Springs Park. I believe that's where I'm looking at. Okay, yeah, Bonnet Spring Park is actually right here. And this is a $120 million park that just opened up maybe 2 years ago, and they just got like another 10 million to put parking in. So these five lakes are typically what surround the downtown, and then basically South Lakeland is where I would say the bougie people are moving into, and it's just pushing this way. Lake Hollingsworth is very prestigious, and it's also near the historic district. And you can basically, it's safe to assume that basically almost every house around this lake is probably a million plus to give you a kind of picture of, the surrounding area. And then, yeah, downtown.
Mecca, you were mentioning Bonnet Springs. It was voted the #1 family park in the nation.
Yeah, I
It's
saw that.
gorgeous.
I didn't know what the date it was. I don't want
Yeah,
to eat my words later.
no, that's pretty cool. Nico, on the link you put, oh, never mind. I see somebody put it in the chat. Never mind.
Check now. I just published it. I don't know if that helped.
Yeah, very cool. I'm
All
in.
right. Thank you.
Thank you, sir.
All right, let's do it. So that's it. Long call. It's all good. We went over an hour. Sorry, guys, but I appreciate everybody for being here, hanging out with us. As always, you know me. I do this day in, day out. So do all of us on our team. This is what we do. We're here for you guys if you want to chat with us. You could either just message any one of us, reach out to us, and I will be sending a follow-up with this recording, with the PDF, and with the full underwriting, so you can pick it apart and give me a call if you need any questions.
Thank you for the
Thank
time.
you, everyone.
Sounds good. Thank you guys so much for the invite.
Thank
guys.
you.
No problem at all. See ya.
You guys.
Okay.